Okay, recording this video after close trade Tuesday, 5th of May 2015. Going to make this a really short little video. The reason for putting out the video is last week I felt kind of bad that I didn't put out a post talking about the importance of the 2090 level on the Emini, and when it got broken on Thursday of last week we had a really strong kind of downtrending move, which was really nice. Well, today I'm seeing the 2080 level as being kind of really important kind of going forward, so I just want to talk about that and what I'm seeing on my charts. Now, support levels are kind of areas where we tend to get kind of big moves. We either get big reversal moves because the support level holds and we bounce off it and we kind of move into a trend move in the other direction, or they fail and we start moving in a trend direction kind of down. So we've been in this fairly wide consolidation for a couple of weeks now, and something's kind of building up. We're going to kind of break in one or other kind of direction. And I'm just going to show you what I'm seeing and why I think it's an important couple of days kind of coming up. Potentially tomorrow is a really important day. Anyway, so one of the things I do is set up on my charts all the four major indices all together with the better indicators on. Obviously on a small little screen like this doesn't look like anything flash, but on a bigger screen this kind of looks nice. And the reason why you want to look at the four indices together is because they move together, but they have different kind of strengths at different times. So here's the Dow is the first one, and this is why this is important. On the daily chart we've had a support level kind of come in. This needs to hold. Blue professional down bar here. We've kind of gone up and tested through the highs of that and come back into this blue professional bar. So we need to wait and see. A break through the lows of that through support will take us into a trending move, and we've been in this fairly tight consolidation, not moved into a real kind of strong trending move for a while. So we go through periods, the market breathes. It has consolidation phases and then trending phases, and we're kind of waiting for that next kind of trending phase. So potentially a break of this support is going to be important. Then the same type of thing on the Russell chart here. So on the Russell, pull back to end of trend, found support here, blue professional down bar. Again, we flirted with the highs of that one, come back through the lows. We got a blue professional down bar today, and we're just closing below that's a better sine wave cyclical support there. So potentially an area that we could kind of break out into trend. So on those two charts we've got supports in, and breaks of those will take us into trend moves on the way down, and that's really important. Now on the NASDAQ, we haven't had support print yet, so we've got some time to run before that support kind of prints in. So the other chart is the S&P 500, same deal. We've not had support print yet here. We've got cyclical time to run, and again we're at the bottom of this blue professional bar, and it's a pretty important kind of channel going on here. So we've not printed on these two kind of charts, but we have printed supports on these other ones. So break of that and a little bit of timing, because we've got to find support at some point on these two time frames, could mean that we're still kind of heading down. And I've been talking about that. The last video I was saying, look for the pullback to end of trend move on the 45-minute chart, and we have not had that. This was the last break that we had through 90, where 90 was a really important level here. So we broke through that 90 level into this really kind of strong move. I think that was on the Thursday, and all we've done is we floated back up, and this is, I kind of call this a last roll of the dice. This is where we kind of move up, exhaustion pattern under a previous high, an important high. We kind of run out of buyers this way. It's the last roll of the dice for professionals to get short, and that blue professional down bar where they were selling it down at the beginning of today is kind of important. And so now with today's low, which was, what was it, 81.50, the 2080 level is kind of an important support level. We will print support on the 45-minute chart, probably in the next couple of bars. A break of that on the way down would take us into that pullback to end of trend kind of situation. As I said, we move through these periods where we have trending moves, pullback end of trend, and then we go through a cyclical pattern, wide kind of cyclical move, and then we break into the next trending phase. You can also see that on the 40,500 tip bar chart here. So that's not very useful to you. We've had a strong little rally in the after hours. It's a bit of a short covering rally. We have had a blue professional bar kind of coming at the lows. Cyclical support is going to print on this chart when this bar closes, so that's our support level at 2080. That's really critical. We have trending moves, then we go through cyclical activity where we can't decide which way to go, and then we break into the next kind of trending move. So that support's coming at will come in at 2080. and then a break of that on the way down will take us into a trending move that could be quite strong on the way down. And look for 2070 to be taken out. I mean, it all could be good and rosy tomorrow. We could hold for this blue professional bar and kind of race the other way, but we still have some trending energy to get out of the way. And on the next time frame down, the 13,500, we broke into a downtrend with today's activity here below a support level here into this big downtrending move. We have not put in pullback to end of trend on this intermediate time frame, so we have to go do that next. And all we could be doing at the moment is pushing back up until we get cyclical resistance kind of up here where we broke down, where these blue professional bars took us through that support level today, that ledge, and broke us into a trend move, kind of coming back up into that zone, which is what are we talking about? Yeah, 95 or something like that, into those 95 levels. Cyclical resistance comes around, we go pull back, end of trend. That trending energy on that intermediate time frame needs to be kind of broken out. So all I'm saying is the 2080 level now is kind of absolutely key. Just to show you why we're winding up, this is better trend line, and the white bars show congestion. We're between rising and falling trend lines. These are auto printed, and then when we're sitting between rising and falling trend lines, we're in consolidation waiting up for a break. And so we've just been messing backwards and forwards. We had a false breakout, we came back into congestion, had a false breakdown into congestion, then we had another false breakout, and now this move today has actually broken us into a potential downtrending move. But when the trend lines start to come together really tight at the apex like that, that just means we've got consolidation kind of going on here really tight. So potentially we've got a move below 2080 into a strong downtrending move. And tomorrow, I mean the 6th of May, just happens to be Flash Crash anniversary day. Flash Crash was back in 2010. Everybody's been talking about it recently. I don't know if it's on people's mind. It's not a question of being kind of superstitious, but it's just sometimes, funnily, these days tend to repeat a little bit. So, not suggesting we're going to get a flash crash, but it's out there as an important kind of historical pattern, and it could potentially lead to some weakness. But anyway, it's the 2080 level that is absolutely key kind of going forward. So that's what I'm going to be looking at on my charts. If that starts to kind of break down, we could have a really nice kind of trending move on the way down to hop on board of. So hope your trading is going well, and just that's what I'm looking at on my charts.